Over to you.
Thank you. So I've got quite a lot of slides, so I'm going to move quite quickly. If you want to email me the presentation, I can make it available, and I probably will record a slightly slower edition because I'm going to fly through my slides. And this is roughly what I do. I spend my life visiting clients. I speak at conferences like this and doing a lot of analysis, and I've actually started trading power markets myself. So I spend a lot of time sitting at energy desks, going through technical analysis and trading strategies with traders. And the key thing about technical analysis is we take the view that price does not equal value. They're just two different things. So we're not really tied up with the fundamental drivers. We're really studying what the price is doing. And it's very hard to teach you the whole subject area in a few minutes, but basically that's the premise on which we work. And so a lot of people always ask me, what's your view of the power market? And I have to say straight away, what's your time horizon? Because without knowing your time horizon, it's very, very difficult for me to give you an analysis. But the beauty of technicals is that if you want to know what's going to happen today, next week, next month, next year, the technicals allow you to do that by changing the chart frames, whereas with fundamental analysis, that's very, very difficult to do. Now, I use particular types of charts. I use Ichimoku charts or cloud charts, and I use weekly, daily, monthly charts, which are the three charts on the left going. So I've got a long-term, a medium-term, and a short-term view. And basically, if the price is above the cloud, this is a bit like being above a moving average, then I can be bullish. If it's below, I'm bearish. And so I quite often will get a situation where I'm bearish short-term, but I'm bullish on the medium and long-term. And so that becomes really useful in understanding that the price will fall before it will rise, or vice versa. And then I use the point and figure charts, and this is a 100-year-old technique. I use these charts to establish the price targets. And I will go through some price targets for power in a minute. But I'm using the same principles. We use a morning call every morning where we put this out to clients, and we say what we believe is going to happen to these products today, based on the technicals. So if you're trading, that's really, really valuable. And the fundamentals will help you in the long run, but they won't necessarily help you trading that market in a day or across a week. And I also record YouTube every morning, what the markets are doing and what's happened and most importantly, what's changed. So first of all, I want to just give you an overview of the markets in macro. So some of these things will be quite useful for you just to take away what's happening in the euro. And so last year I said the euro was at a critical level. I spoke at this conference in Vienna last year, and I said the euro 105 was a critical level. This was the chart a year ago, and it's just drifted lower. So the chart doesn't actually look a lot different. This is a long-term picture of the euro against the dollar, and it's just drifting lower. So the euro is still we're in an environment where the euro is long-term weak against the US dollar, and that picture hasn't changed in a year. That's the long-term picture. And the dollar actually is looking quite strong. So on the left hand here, I've got my weekly, my daily, and my 60-minute chart. So long term it's bullish, medium term it's finding support and looking bullish, and short term it's bullish. So dollar bullishness is a real factor for chartists in the market, and we've got upside targets for the dollar of a few percent in the short term. So the dollar is always at the moment in that strong position. Consequently, euro dollar is weak. It's weak on the long-term chart, it's below the cloud. Medium term it's weak, and short term it's weak, and we've got downside targets there as well. So we're seeing euro weakness being a factor. A lot of people, because I'm based in the UK, a lot of people always want to know about what's happening with sterling. And in fact, sterling's been surprisingly strong against the dollar. It's been rising on that medium-term chart. We've had a bounce. The market is pricing in a deal, if you like. But of course, long-term and short-term, we're still weak against that stronger dollar as well. Looking at US stock markets, they're now looking very bullish. So the sentiment, if you like, the global sentiment in finance is pretty bullish. UK indices are making new highs, except for the Russell 2000, which is the index in the bottom, but the Nasdaq, the S&P, and the Dow all making new highs. And I've got the chart just in the left here, the charts of a year ago, and it was looking less certain a year ago, but now we are seeing markets looking very bullish. Europe is lagging. It's not looking as strong as the US, so we're seeing this US strength being really dominant. Europe is still struggling a little bit. The bottom left is the CAC 40 in Paris. That is actually breaking to multi-year highs, but the UK and German markets still not quite getting there. And the bottom market is the Hang Seng, and that's in a downtrend and has been for a couple of years. So all the political turmoil we're seeing in Hong Kong is playing into this chart, in fact, and the Asian markets are looking particularly weak compared to the US at the moment. Gold is normally a proxy for uncertainty as well, and we're seeing the gold price having had a very strong 2019, so a lot of uncertainty in markets, and so we are seeing gold prices looking strong, although we are seeing some short-term weakness now creeping in on gold. So that's just the macro picture. Looking at energy drivers, I start normally when I'm looking at energy with crude oil. Obviously, it's a very heavily traded product. Technically, we like products that are heavily traded. The efficiency of technical analysis is better. And what I've done here is I've put a 10-year seasonality chart. That's the red chart. And so we see that crude oil, this is a well-known relationship, that you get the summer driving season, prices rise in the first part of the year, and then they fall in the second part of the year. That's become a little bit skewed in more recent years. This is a 10-year seasonality. So we're able to say, based on the last 10 years, weighted more towards the current years, what does the seasonal tell us? And it tells us that we shouldn't be surprised to see a strong quarter next year, the first quarter in crude being quite strong, and then we've seen that creep forward such that the breakdown in the crude price tends to happen a little bit earlier. But we are in territory where crude tends to have a little bit of a fall off at the end of the year. So for the moment, that's a little bit worrying. And then I've got the correlation with the US dollar, and normally we would expect that to be negative, i.e. the dollar goes up, crude goes down. But we see here with the 65-day rolling correlation, that's not always the case. And at the moment, the correlation is fairly neutral. So the dollar is probably having not much of an impact on crude oil at the moment. Brent is actually a difficult call at the moment. It's long-term bearish, it's medium-term just starting to look a little bit better, and short-term, of course, that picture changes all the time. We've got upside and downside targets, and this is actually a factor for most energy products at the moment. Really hard to call because they're not really trending. So crude oil could go either way. I think the really interesting thing was that when we got the Saudi attacks, crude did react, but it was very quick and short-lived, and the market has taken that in its stride, and crude oil is still relatively weak. Much the same is true of WTI, of course. So we are just seeing some inherent weakness in crude oil at the moment. But of course, remember, Q1 next year is the strong quarter. US nat gas actually is breaking out at the moment, so it's looking quite strong. I don't know how many of you look at US nat gas, but in terms of the energy mix, it's been a really difficult product, but it does have these moments where it just starts to go crazy. It did that at this time last year. It went to $4. And so we're seeing a little bit of a resurgence again. So that's something just to keep an eye on if you are trading the US product. Coal is... this is my screen. I'm looking at lots of charts, and that's the key thing. I have lots of different charts on lots of different time horizons with lots of different analysis on, which helps me at a glance get a view of what's going on. But the key thing is that top left chart. That's a weekly chart of coal, and you're seeing that it's fallen very heavily and it's teetering along the bottom. And if we fall through that key level, then we have got some quite significant downside targets for coal down to $50, $60. We've got multiple targets there, so we could see coal going a lot lower. At the moment, that is not a bullish chart. The carbon price is actually been relatively resilient, and we see at the top left weekly chart, the long-term trend in carbon has been pretty strong. The medium term is a little bit bearish, going down on the bottom left. It's actually just looking a bit bearish, but I look at the 1 minute charts. If you're trading carbon, the 1 minute charts are essential, and we're seeing here that we have got a little bit of a short-term resurgence. So bullish on the long term, bullish on the short term, but medium term there's some uncertainty, and that makes it quite a difficult picture. But once you can get your head around that for trading, it's quite valuable. Looking to gas now, NBP this is the front month contract, and again we see the seasonality here is such that we tend to see the gas market falling away at the start of the year, so we shouldn't be surprised to see prices falling there. Correlation with Brent crude is this bottom chart, and at the moment it's not heavily correlated with the oil price. That correlation chart helps me know whether I should pour more weight behind moves in the oil price or not, and at the moment crude oil is not having a massive impact on European gas prices. Long term, we're still in a recovery mode, and overall bearish, hitting some resistance. Medium term, we have found some move to medium-term bullishness, and of course we're seeing some short-term moves, but the long-term picture for gas is still not great. And TTF, much the same picture as you might expect. We have quite a lot of upside targets because this new move has given us upside potential, but it's quite a difficult product to call. So gas having an impact on power is quite hard. Anyone who's trading gas will generally be, if they're using Updata, and a lot of European energy traders are, they'll generally be looking at these short-term targets. And what you'll have noticed, this is over the last couple of months, and what you'll notice in the short-term charts is that there are always these downside targets, and that's just constantly reminding us of the downward pressure in gas prices. So we're seeing these downside targets all the time, and the short-term upside targets are counter-trend, and they tend to be short-lived and not as many of them. So the trend is your friend is very much what we say in technical analysis. So gas is falling generally, and we're seeing that trend. So I'm here to talk to you about European power prices, but of course I wanted to give you an overall mix of just what was happening with other products. And so we start with German power. It's of course the main contract. And so we saw that in 2018, German power had this really big surge in price. And I think that took quite a lot of people by surprise. And of course, we all get used to that, and we think, oh, wow, this is the beginning of something, and it's going to keep going. And then suddenly we hit the buffers, and ever since, over the last 12 months, we've been in a really big range on German power. And so long term, we're just holding on to support. Medium term, we're bearish below the cloud, and short term, we're also bearish. So it's interesting that it looks like this long-term trend, and one of the key things that we're seeing is, in technical analysis is really key, is that we're seeing progressively lower highs. And the progressively lower highs means that people are more and more willing to sell at a lower level than they were previously, and so that is driving this market down, if you like. And there's a support level around 45 euros, and that's really the base level. And if we break that, that will be quite significant for power prices, technically. And so that 45 euro mark is getting closer, and we need to just be aware of that. And consequently, we have got downside targets to 40 euros, 37 euros, and even 33 euros. So we could see power prices, if they do break down, going into the 30s. So we're not there yet, and it will take time. This is a long-term picture. But it does look like if we break that 45 euro mark, we'll then be looking to 40 euros. Then potentially, if we break 40 euros, we'll be looking to 35. And then, of course, if we break that, we'll be looking to 30. The medium-term picture, we've got downside targets to 45, 46. So not really telling us that we're going to get a break there. And then on the long-term picture, on the short-term picture, the bottom right chart, we do have targets already below 45 on that short-term chart. So again, significant that power will break down potentially. French power is already doing it on the long-term chart. The medium-term chart is also in the similar picture, and of course short-term we're bearish as well. We have got all these original upside targets on the top left-hand chart. Top right-hand chart. We are seeing those targets, but the new targets are to the downside. So it's more and more the case that we're seeing power markets looking under pressure over the coming months. Czech power is a similar picture, of course, hasn't quite broken down, and Italian power is already breaking down. So we're seeing these power markets fairly much in unison, looking set to go lower. So I basically, what most of our clients who are trading are doing is they're looking at the trade data. So this is 6 months of 1 minute data, and they're using this to make more and more trading decisions. So this is the short-term targets as of Monday morning for German power. So I had downside targets of 45, 45.20, 45.10. So all these targets are pointing to this critical 45 euro level, and that is becoming a really important level for German power. And you can see that we've also got on the chart on the right hand side. This is a little bit of a less granular chart. We've got a downside target to 41.50, and of course that target worries me because that takes us through that 45 level, and that's kind of like the next place that it goes. And so what I'm saying is, if we see, I'd say 3 trading sessions where we're below 45 euros on German power, then I think we will see that is a break of that support level, and then we look to the next floor. And so what's interesting is the power price is spent a long sort of a year of going sideways in this big range, and then suddenly it breaks this support level. It's a bit like a coiled spring, and then suddenly you see a big price movement. And so that's, from a technical perspective, what we really have to watch for. More and more of our clients are doing automated trading. I'm actually starting to trade German power myself, and the rise in automated trading is becoming a big thing. And these are my top 9 trading systems that I'm constantly looking at for German power. The black line is the equity curve, and the red line is the underlying power price. And of course, what I'm always trying to do is outperform the market itself. And so here's an example of a power trading system where basically what power trading is all about is to try and take out that volatility and have an equity curve that is constantly going up the hill. And so we're talking more and more with clients about trading systems, and I'm running trading systems all the time, just establishing which trading systems are producing the best results, scanning these trading systems to do that. So this is the overall objective of technical trading, which of course is very, very hard to do with fundamental inputs. So it's all about trying to beat the market there. So I always say to people, good luck, and good luck tends to happen in uptrends. So if you're hoping for a rise in the power price, at the moment it's looking pretty unlikely. So it's better to recognize that the power is falling. If you're on the buy side, if you're buying power, that means you don't need to buy forward. If you're on the sell side, I'd say sell everything you've got while you can, and that's a good way to think of it. If you're in production, sell your production now. If you're on the other side and you're buying your procurement, just hold off and wait for it to fall. Feel free to email me. I'm welcome to provide the slides and a recording of this presentation. And of course, I produce analysis every day. So thank you and good luck.